I'm really excited about this one. I spend very little time on stage, so I'm a little nervous. And I've seen most of you speak at different conferences. I saw you speak at Cantor Fitzgerald. You had that amazing discussion on NAV. I loved that you challenged people on net asset value. I saw you speak at SALT, Brittany, and amazing insight. And then Eva, I haven't seen you speak, but I've seen your dad speak a lot on the poker table, which is super interesting. And then Parker, I have a deep fucking DeFi value hat that I wear every single day. So yeah, I'm really excited about this panel. And if I stutter, if I stumble, if I have any awkward pauses, feel free to jump in and save me. But yeah, I think let's start off with introductions. My name's Hamid. I'm the Vice President of Global Development at Luna PR. And Parker, I'd like you to start off with an introduction.
Yeah, Parker here, COO and CIO at DeFi Dev Corp.
Hi, my name is Ieva, and I'm a director at DigitalX, which is a listed Bitcoin treasury company in Australia. And we are the largest one there.
Good afternoon. My name is Maja Vujinovic. I'm a CEO of FG Nexus. It's an Ethereum DAT. I've been in the space for about 15 years.
Hi, my name is Brittany Kaiser. I'm the CEO of AlphaTON Capital, NASDAQ ATON. We are a ton treasury company and also a Telegram-focused vehicle investing across the Telegram ecosystem.
Amazing. Sorry, I don't know the mic distance, but I think going right into it, for years, you know, we saw in 2020 when MicroStrategy first started accumulating Bitcoin, it's dominated the narrative, right, of what people put on their balance sheet as an asset, right? We saw Tesla do it, and then Square, and then so on and so forth. It's grown so much, and it's been that benchmark asset that people refer to in digital assets, and rightfully so. Since then, today's landscape is shifting, right? We've seen it go further and further down that coin market cap top 100, and we're seeing more and more diversity in the assets that are publicly listed and available for trade. I think the question now isn't, you know, if institutions will hold digital assets. I think the previous panels have sort of proved that it's what asset they'll hold, right, and how they manage that asset. My first question is more, you know, about the domination of Bitcoin, right, and if that is now a played out narrative. I know we talked about narrative a lot. Is it fading, or is it going to be just complemented by the new asset classes like, for example, TON and Ethereum, Solana, and then I want you to have the argument for Bitcoin here and why it's here to stay. So Parker, I'll let you start with why Solana, and then we'll have the contradicting opinions down the line.
Yeah, so certainly a big Bitcoin believer. I love Bitcoin, but ultimately Bitcoin is not a productive asset. And so when you look at, say, MicroStrategy and many of these other Bitcoin strategy or Bitcoin treasury companies with the issues with the MSCI, there's not a whole lot that you can do with your Bitcoin. It's great at store value. It's awesome. But with productive assets like Solana, like Ethereum, like some of the others here, you can actually build a business around it, and you can run validators, you can deploy capital into the DeFi ecosystem, you can help bootstrap liquidity on different protocols for different types of trading applications. And so by harnessing this productive asset, and I'm speaking for us, by harnessing this productive asset, Solana, we can actually build an operating business. We have revenues, we have free cash flow, we have earnings, you could value our business on a PE basis. And so certainly people apply an MNAV multiple to look at our business, but you can also look at it in these other ways. And I think over time you're going to start to see more and more companies kind of push towards that narrative of, you know, breaking away from the NNAV anchor and pushing towards more traditional measures like a PE, like a price to sales, that kind of thing.
Yeah, go ahead.
Yeah. I mean, if we look at solely just the numbers on CoinMarketCap, then obviously you'll see $3 trillion market cap of all cryptocurrencies, and then around just under $2 trillion is Bitcoin. So it's clearly dominating there. In terms of listed companies holding Bitcoin, there's $100 billion worth of AUM compared to maybe like 10 million of ETH and 2 billion of Solana. So I feel like it still definitely comes out as the dominant one. No, Bitcoin doesn't generate a yield necessarily, but that also means that doesn't have any inflationary pressures on it. And there are things around, like you can have a profitable operational company and then inject that cash flow to buying Bitcoin. And then you could also, like Michael Saylor is doing right now by issuing all different types of credit instruments to also help generate yield. So I think that there's definitely things that Bitcoin treasury companies can do. And I think for right now, Bitcoin is still dominating.
Yeah, and just to sort of go back to the original question, do you think we'll see more Bitcoin treasuries come out the gate, or will there be more of the alternative assets?
I think there's going to be like less competition, but I think that the existing companies are going to continue scaling and acquiring Bitcoin.
Okay, and then Maya, if you don't mind.
Yeah, I actually agree with Ieva on this one, even though I'm a running Ethereum DAT. But I think it's from a little bit of my perspective of just being in the space for 15 years. I'm an investor in Solana. You know, I came into the space because of Bitcoin. I also really think that there's space for multiple chains, that we are going to have a world of multiple chains, right? For me, it's really crazy to think that you can be so zealous in thinking there's going to be one chain that wins. I think it's a bit ignorant. So I would say, you know, perhaps educating a bit on that is important. I completely agree on Bitcoin. People hold Bitcoin. It's like king of digital assets, and they hold it for different reasons. It's really started from kind of a movement of, you know, Occupy Wall Street, right? So there's a whole different narrative around Bitcoin and why it exists. I think with other assets, like Parker mentioned, right, there's obviously productivity to it. Reality is, I mean, it's not my opinion. It's part of the reason why we chose Ethereum. And most of the DeFi is on Ethereum. Most of the tokenization is on Ethereum. Most of the stable coins are on Ethereum, right? That's just a fact. And so will things keep going back to that chain? Absolutely, right? And is there space for now Solana for taking a part of the institutional route or retail route? Absolutely, and TON and everybody else. So I think there is a space, and I do think that next year, to answer your question, you will start to, what I'm noticing, what we are being pitched at the moment is hedge funds that have 200, 300, 400 million dollars in crypto that are wanting to run DATs now, right? And so I don't think that that play is going to stop, because I do think these vehicles are extremely efficient to bring digital assets to Wall Street and to masses. And I think it was earlier that Philip said on or Yatsu, I don't know who talked about it, but I mean, these vehicles are allowing everybody now to know about crypto. I mean, right, crypto is just a small drop in a bucket of financial system. It's really nothing. We all think we're so important in this room, right? But like nobody else does. And so I think there's just like a large amount of capital that wants to come in, and this is the way they see it. Unfortunately or unfortunately, right? Depending on how you look at it.
Yeah, I'm going to second some of the points that were just made here. I've also been in the industry for nearly 15 years. I started Bitcoin mining in 2011. Bitcoin is always going to be the basis of what brought most people into this industry. This is now my third company I've taken public on NASDAQ, and the last two had Bitcoin treasuries. Trust me, 5 years ago, people thought I was crazy for trying to make a Bitcoin treasury in a biotech company, and I had to fight my board and I had to fight my shareholders in order to not sell the Bitcoin and Ethereum that we had taken in as investment in one of our pre-IPO rounds. And then my last company is now American Bitcoin, so I co-founded one of the world's largest Bitcoin miners that I just exited, and had the opportunity to look past Bitcoin at what else I thought was the most interesting opportunity in crypto, and for me that was easily Telegram, because of some of the different types of utility that were mentioned on this panel already. But with 1 billion monthly active users, adding 2.5 million users every day, the amount of utility and ton-on-ton returns that I can make for people is really exciting. So it's really thinking about how we can, instead of just holding a treasury, how we can actively manage operations that include ways to make more ton per share for our shareholders. And now that's everything from not just DeFi and staking, but even AI now on Telegram, where we can earn TON for processing Cocoon. So I'm very excited about the opportunities outside of just Bitcoin, but I do believe that at some point every company will hold at least Bitcoin on their balance sheet as a store of value instead of having extra cash reserves. But that doesn't mean we can't explore all of the other very exciting opportunities for the public markets across the digital asset space.
That's well put. And I know you mentioned, looking beyond and the various opportunities that there are available. What is the criteria, in your guys' opinion? Obviously, Ethereum, Solana, TON, and then you involved in Bitcoin. What are the criteria that people should look out for when it comes to an asset that it's a safe investment or a comfortable investment on the retail and institutional side? Like we've seen hype DATs, we've seen Doge DATs, we've seen near DATs. What is the criteria that investors should be looking out for when bringing on accumulating these tokens? Parker, if you want to start us off.
Yeah, I think this gets to the more fundamental question of just like which assets, should you buy if you're a crypto investor. General rule of thumb I like to take is, does an asset recover through a bear market and return to an all-time high? Very few assets can do that. Obviously Bitcoin has done that over and over. ETH has done that. Solana's done that. There might be a couple others that I'm missing, some smaller ones. But I think generally speaking, you want to see an asset that has recovered from a bear cycle, that has survived the XYZ asset is dead statements. Because ultimately when you're building a company, public company, it's for decades, right? It's a long-term vehicle. And so you don't want to have an asset that collapses and then bleeds out and never comes back. So I think for a DAT, it makes sense to select an asset that has stood that test of time, at least for one cycle. And then, hopefully that bodes well for future cycles.
Yeah, so I think for treasuries, it's super important to be clear with like what your risk appetite is. And then when you can set that, I think it's also probably important to just pick one asset that's going to be, your North Star, and your whole goal is to, like a traditional company would continue to increase earnings per share. It's the DAT's job to increase whatever token per share. But I think, as, for listed companies, like as directors or, members of C-suite, obviously you've got fiduciary responsibility. You can't just take on any random asset and put it on the balance sheet, because you wouldn't really be even functioning as a DAT. Then you'd kind of be like a hedge fund or a VC. So I think it's super clear. It's super important to be clear about what your strategy is, and then work within it to pick your asset.
I'm not going to say not you, but I think that question shouldn't even be considered, because I think it's extremely stupid to look at anything in crypto that doesn't have deep liquidity, very deep community, and has stood test of time for a number of years that you consider for a DAT. I think you should not be in a business of running a publicly traded company. That you should just be a crypto degen and you should just go do something else. And so I think let's, like, if we can get serious for a second, this is a publicly traded company. You can't behave how you behave running a startup in crypto. You can't, my learning curve, I was telling some of my colleagues here, who I've known for a while, he works at Solana, and I still love him now. But we've known each other for a very long time, and so reality is that my learning curve hasn't just been like this steep, it's just been like this on running a publicly traded company. I mean, you can't, people say, oh, well, just do gymnastics and DeFi, and you can get 12% over here and over there. I mean, you can't do that. This is somebody else's capital. You are, everything you do and write is looked at by SEC, like double, not just once, but double. And so I think for me, there's no question besides top 5, 6 coins that have deep liquidity, deep community, have proven retail, have something that has been there over time. Everything else is a joke.
So, to that point, is something like Hyperliquid that's been around for less than 6 months now, that has community liquidity, but doesn't check off the box that is, stood the test of time, would you consider that as more of a riskier DAT?
Riskier, yes, I would. Yes.
Interesting. That's awesome. And
Yeah,
Brittany?
and I completely agree with that. For me, I had the opportunity to learn from investors that are much more experienced than myself. Everyone from Sequoia to Ribbit to Benchmark to Draper to Skybridge, all of them are heavily invested in TON. The largest holders of Telegram bonds are BlackRock and Blackstone. This has been very well vetted by all of the top investors in the entire world. So I get to follow the best and build even more community and ecosystem investments around something that everyone has decided is one of the best investments in tech.
Amazing.
Can I add something?
Sure.
Is that okay?
Yeah,
okay.
of course.
It's just what Brittany was saying. It's actually just to piggyback on that, because I'm looking at a room, and if I was in a room like listening to this, like everybody's looking at DATs and going, oh, it's just like so played out, and everybody's below MNAV, and it's not really exciting. There's just like a dark cloud above DATs, But the reality is, this is where we are in the ecosystem. This is the natural evolution. There's no liquidity in crypto, guys. No, really, like liquidity comes from TradFi. And so reality is that this is a natural evolution. Look what happened with Soulmate and Rockaway X. I mean, it's a way for Rockaway X with their infrastructure to get out public, right? There's no other way. Those are individually small companies that will never go public. They suddenly find a DAT, right, or a publicly traded vehicle, and they're public overnight, right? And so now they get access to massive liquidity, and then Wall Street gets exposed to a lot of stuff that they usually wouldn't, right? Because it's all within our little crowds of where we invest in. So this is just the natural evolution, and I think what comes after this, for me, is more interesting than kind of what is today.
Yeah, and I guess building on that point, what is the benefit for the asset or the token that's being accumulated? For example, what's the benefit for Soulmate in that circumstance?
I mean, they think about it. All of our DAT, and I don't know, maybe all of you can speak differently to that, but we all have a problem as a DAT, which is a great problem to have. You got to figure out what you want to be when you grow up, because you can't stay where you're at. So reality is, yeah, sure. I mean, if you have a, $1 billion, and maybe you had a chance like Tom Lee after that first Fed cut, right, to catch that ATM, right, and you racked in billions and you have a trading volume, now you can pay all those fees, right? You can sit tight for a little bit, right, wait for ETH to make up its mind and be at 5K or whatever it wants to be, right? But until then, you've got to figure out how are you going to either roll up with others, what other businesses you're going to run, are you going to decide to be an aggressive hedge fund, right? What do you want to be when you grow up? Or are you going to start rolling in businesses, right? I've got DATs who have a lot of cash flow who are saying we're going to start acquiring businesses that are in their ecosystem, right? So like Solana or Ethereum or whatever. But I don't know. I would love to hear what other DATs are thinking about saying. Like what do they want to be when they grow up?
Yeah, absolutely. And what we've been working on from the beginning, of course, like everybody else, we raised our first pipe in order to accumulate a large treasury of TON tokens. And then we started looking at what other M&A and ecosystem investments do we want to make. So from gaming to DeFi to other business apps that operate in the Telegram ecosystem. For us, we have been announcing every few days a new company that we are buying or acquiring a majority stake in, and also building more infrastructure in order to support the TON network, technically, physically. We were very pleased to find out that 5 weeks ago, Pavel Durov announced that Cocoon AI, where you're paid in TON in order to contribute GPUs, would be launched this month, and it launched last Sunday. We came on as a launch partner, so now we're investing our first over $100 million into GPUs in order to be one of the main contributors of power to the Cocoon AI network. If people are not aware, Telegram has over 1 billion users, OpenAI has 800 million, and X has 600 million. And when X created XAI and integrated Grok into X, XAI is now raising at $200 billion, and it's half the size of Telegram. So we are getting into some very exciting AI infrastructure moves in our company, and that's going to be a big chunk of our business for the foreseeable future. And we're earning more ton on ton, all the ton that we're paid, in order to process AI gets added to our treasury. We also have created a platform where people can pay us in other tokens or in fiat, and we use that to buy more TON, constantly create buying pressure from AI users on TON and put that to our treasury and restake it. We're also investing in Telegram bonds, which yield 9%, and we can use that to buy more TON, stake it, and earn another 4%. So we're finding a lot of ways to do that compounding TON generation, which we're really excited about.
Yeah, so I think our goal is to continue increasing Bitcoin per share in an accretive manner. That's all we want to continue doing forever. So what that looks like for us now is just scaling our operational company, which is a brokerage business, and then exploring different ways. Obviously you can't really, you can't stake Bitcoin, but there's things that you could do on a layer 2, like the Lightning Network. So we're super interested in that. That's like a peer-to-peer payments system where if you operate a node, you essentially get paid a routing fee in Bitcoin. But it does have its own scaling issues for the moment. And then obviously, historically, a lot of debt was issued collateralized by gold or other assets. And so it's like, how can we leverage that? Obviously, we've got a balance sheet of Bitcoin and exploring avenues to do that, whilst also, considering the other side of debt, which is, con notes, stuff like that.
Brilliant.
But I think, I think just the era of just straight, pipes or placements debt, is gone. You need to do something more, and you kind of need to transform your company into, cut costs as much as possible and increase income as much as possible.
That's amazing. And I mean, you guys are setting the example for the whole Australian market, being the first and biggest in Australia, right? Parker, I'm just going to echo Maya's question here. What does DFDV want to be when it grows up?
I don't think we want to grow up.
No?
No, I'll take that a little further. I think ultimately we want to be the go-to Solana ecosystem exposure play. So if you're an institution, of course you've got the ETFs available to you, and you might want just that raw kind of price plus some staking yield exposure. But we think expanding beyond that, the Solana ecosystem has so much more to offer. Pairing that with the capital markets, traditional capital markets activity that, Saylor's popularized, but that can be further enhanced on the Solana side by creating crossover type instruments that are listed both in US public markets or even global, but then also on-chain. So we can really create this bridge, hence our logo, it's a bridge logo. We can create this bridge between TradFi and DeFi. So what I like to say is, our mission is to bring TradFi capital into DeFi, and DeFi returns into TradFi. And so to the extent that we can give investors exposure to the entire ecosystem, not just pure price exposure, we think we have an attractive offering relative to buying the tokens directly or even an ETF. So ultimately what we're trying to do long term is to kind of round out that full exposure and to have ultimately generate growth from all the different facets of the Solana ecosystem.
And what are some of the opportunities in the Solana ecosystem? I know you touched on it vaguely, but what do you guys sort of invest the treasury into?
Yeah, so ultimately a lot of, the lifeblood of DeFi is liquidity, right? That's the lifeblood of finance, not unique to DeFi. And so we have a large pool of capital that we can deploy to help bootstrap projects. So whether that's, liquid staking and restaking tokens, whether that's unique plays on leverage, whether that's unique synthetic-based stablecoins or RWA-based stablecoins. There's a lot of different things that can be done to help grow the DeFi ecosystem. And a lot of times, there's this 0 to 1 problem where if a protocol could get, let's call it 20 million in liquidity, then getting to 200 is pretty easy. But getting that first 20 million in liquidity is very difficult. And so surprisingly, I know there's lots of hedge funds out there and venture investors, but there's not a lot of like liquid investors that want to bootstrap liquidity without taking giant token deals or what have you. And so to the extent that we can kind of come in and help some of these projects get off the ground from a liquidity perspective and take some tokens on the back end for our time and effort, we can help grow the ecosystem and see a lot of the projects and the themes or metas emerge that we want to see emerge because we think they're important for decentralized finance to develop.
Awesome. And Maja, when I was listening to you speak in Miami a month ago, you were talking about contributing to the ecosystem and that being part of like that managing of I guess the asset and expectations. So what do you guys do to sort of contribute to the Ethereum ecosystem, or vice versa, involve yourselves in some of the opportunities to generate yield within Ethereum?
Yeah, I think generating that 3% yield is it's going to get really old really fast. I think people are excited about that initially, but I think that gets old and gets inflationary as well. So next step is restaking, then DeFi, right? Deploying in some DeFi protocols. Also, really, most DATs won't admit that, but every single DAT, including Tom Lee's, right, they all trade. They're all going to trade. They aggressively trade, and so you kind of have to do that as well. I think from our perspective, just kind of given my background in the space, and also I've been institutional before, worked for SEC a little bit, and then at GE, where I developed the first trade finance deal in the world between JP Morgan and GE with Joe Lubin. I think we are looking at it a little bit more kind of an institutional way towards tokenization. That's really where my focus is, and that it's where the world is going. Stablecoins and tokenization, and so DeFi as well. But we need obviously a lot of that clarity to come in. So I think when what we're trying to do at FG Nexus is really look at what the opportunities might be for us to play the tokenization game and contribute that way. And then more directly into ecosystem would be through DeFi for us, because I truly believe in DeFi. Part of the reason why I'm in the ecosystem is because of that. I don't like the word decentralized finance. Democratizing the world. I like more decentralized finance. But so it's because of that space that I keep being in the space and seeing kind of what DeFi potentially could do is really exciting. So I think for us, it's, I would say, DeFi and tokenization.
Awesome. And I guess my next question is, I don't know, I had rapid fire questions. I don't know if I want to get into these now, but they're a bit interesting and controversial. I'll skip it for now, actually. Wait.
Controversial? No, let's go.
I don't know. I don't know if you guys want to answer this, but...
The bro on the stage is ready.
Let's go.
Well, let's start with you, Parker. You have the excitement. If you didn't choose Solana as an asset, what would have been your second choice? What would have been the backup? Shell something else for me.
Well, hindsight's 2020, but probably should have done a Zcash DAT.
Ooh, you missed that on that one.
Did you want to answer, Ieva?
Yes, I guess for me it would be Solana. Kind of had things to do with them in the past, and like the way the validators run, I think the transaction fees and the transaction speed, like it could be, with the right updates set up for high frequency trading and like equity tokenization. So I feel like it's got a lot of utility there.
Is there a multi-asset treasury future for DigitalX?
I don't think that's what our investors want to see, and I think that like streamlined approach is something that can justify an MNAV premium. So I think it wouldn't be right to do that, but I definitely appreciate all the work that the Sol Treasuries do.
That's awesome. Maja, do you want to...
If the question is, what would I do if I didn't do Ethereum DAT?
Exactly.
Definitely wouldn't do. I agree. Multi-asset DAT, I think that they're going to struggle massively. I think Yatsu earlier mentioned it, and I spoke to him about this, where like You got to pick one. You got to grow and, really be solid, prove. Because I think what's going to happen next year and year after, you're going to start to see more and more TradFi coming in, and you're going to be nobody in this space if you don't build something right. If you just think that you have, large treasury because you raised some money in 2018 and you're still around, it's a joke. The real projects are coming on, and so I would say focus on one. If I wasn't doing an Ethereum one, I would never do a DAT.
Oh, come on, you can't do that.
Oh, hardcore. I like it. Well, I mean, outside of Bitcoin, because I've been doing Bitcoin DATs on NASDAQ for 5 years without, I guess, anyone noticing, because we didn't call it a DAT. We just had Bitcoin in our treasury. But, I wish I could do a mic drop like that, being like, TON only. But in general, like, as a company with a TON treasury, we're very focused on privacy-centric technologies and digital identity, and even like Cocoon AI for Telegram is confidential compute. So I like that someone said Zcash, but like, maybe even new assets like Midnight that launched yesterday. I mean, Charles Hoskinson is the one with the long-term track record. Even though he just launched a new one yesterday, it's already at $1 billion. Love the rational privacy play. You just talked about YAT. I mean, Mocha token, where they have, and a Mocha brand says over 700 million daily active users across their 600 companies, and they're implementing Mocha as their digital identity and on-chain credentials tech. I mean, those are the types of things that I really like because I am a data protection and data ownership advocate. So, but that's also why I love TON and its infinite sharding architecture, which is amazing for data protection, and why we're building out, a lot of privacy and data protection centric technologies that we're launching as Telegram mini apps. So I think anything that really touches solving the problems that I care about in the world and is using Web3 technology to do so, I could have possibly been persuaded to do.
That's awesome. That's all I have in terms of questions. I had a couple more, but they were answered throughout the panel. I think what I would like to hear is, just for the sake of everyone in this room, outlook for 2026, outlook beyond that even. Where do you guys see this market heading towards? Whether it's more single asset treasuries, more multi-asset treasuries, more Bitcoin focused, more alternative or altcoin focused. Where do you guys see the market playing out? And that's from a macro perspective, not just the United States, globally.
Well, we've been pretty public about our thesis that we think Sol is going to 10K. So, Sol to 10K.
Brilliant.
Yeah, I think that there's just going to be less Bitcoin treasury companies, but the ones that are still functioning are going to function at a higher scale. I think there's going to be a lot more institutional adoption of Bitcoin. I mean, already you can see financial advisors like BlackRock, Vanguard are all recommending 1 to 5% of the assets in your portfolio to be in Bitcoin. Then tier 1 banks like Bank of America, BNY Mellon, are now saying you can get Bitcoin backed credit. So I think the price of Bitcoin, considering the scarcity, considering the fact that there's already so many lost coins, there's 1 million in Satoshi's wallet, I think it's going to continue appreciating at least 30% per annum. And then the actual good functional treasury companies will continue to win.
I think for investors in the room, I would say I don't want to pick one thing. I think it's really hard to do that. There's a part of me that says, in 2-3 years, Bitcoin forks. There's a part of me that says every corporate will have a Bitcoin on a balance sheet. There's a part of me that says none of that will exist. So I'd say for investors in the room, I would say ride the wave. That's very important. I feel like those of us that have been in crypto for a while, if you are not plugged in and you can't kind of ride the next wave, you're probably going to be left behind, particularly with AI coming in now with everything in crypto, with everything and everything. And so I think it's going to be really important to kind of look at and pivot fast, so be adaptable. And I think everything that can go public in crypto will go public. will try to find ways to go to public markets, have more liquidity. So pay attention to those maybe that are infra providers that are going to look for DATs to go public through them. So I can't give you a specific answer, but I can tell you that really opening the eyes and being very agile in how you look at the market and being able to move from one thing to another trend, what I think is going to be very important, because there's going to be trends that are going to be short for 2 months, 2 weeks, 6 months, right? And they're going to keep evolving.
Brittany?
Yeah, I would say, I mean, for the past 10 years, I've been begging people to start using distributed ledger technology in their database architecture just for data tracking and traceability and permission flows and data monetization. And now that I would say the biggest trend that I see right now, that I think about every day, that I dream about when I'm sleeping, is decentralized AI and everyone having DLT architecture and being able to track and trace what data is going into which algorithms, which ones are being monetized, what data is consensually permissioned, what data should be allowed to be used in what types of modeling. And I think that is a huge, huge opportunity. And I've gotten really deep into it over the past couple of weeks, starting to get H200s and B200s to run confidential compute and earn me ton, which these machines have never done before. It has been very, very special. Military-grade privacy technology, earning crypto, that is bleeding edge new, but I think that's going to become a much, much larger trend, especially with Telegram leading the way and 1 billion people using this tech starting last week. So I think there's a huge opportunity for a lot of AI companies to start holding crypto on the balance sheet, because they'll start experimenting with some of these technologies across all of the top L1s. You know, it's not just going to be a ton thing, but just to be able to prove where the data is going and coming from, so that we actually do have the ability to solve hallucination problems and make sure that data is actually being licensed properly, and we don't completely get rid of IP and copyright and trademark for the rest of the future. I think you know, regulators and legislators would love that, lawyers would love that, creatives would love that, any companies with IP would love that, so that we're not just giving everything away to Sam Altman for the rest of time.
Awesome, awesome. I just saw TT walk in, so I know we're out of time. But I started this panel very nervous. I'm really grateful that you guys are my panelists, actually. You guys made it a lot of fun, so I appreciate that. But yeah, thank you guys so much. Let's get a big round of applause for everyone on stage. And